Crypto is surrendering to banks. Today, we're going to break it down for you because this is a big issue that we need to cover. Let's just get started. Before we go there, I do want to thank our sponsor, and that's iTrust Capital. This is the all-in-one platform out there. Brand new website refresh out there. You guys can get into cryptocurrency, stocks, gold and silver, all of this available in one platform for your own crypto IRA. All you guys have to do is jump over and start your journey with a crypto IRA over on iTrust Capital. Very simple to do. Just visit the link down below. You're going to get a $100 funding reward just to get started. So you guys take advantage of this because this is a good step in the right direction as you start tax planning. Can you believe we're almost in the fourth quarter of this year? Tax planning will begin. So get ready, guys. Let's lead off with this right here. And that, of course, is bull theory, hitting on a few things. And this is all about the drama last week. This is the SEC, the CFTC, the White House, all are holding major meetings now on crypto. On Wednesday, we're going to hear from the White House in reference to meeting with crypto leaders along with the chairs of the SEC and the CFTC. So Selig and Paul will both be there. Remember, the last one was in February. This was more focused on stablecoin rewards, and we had no agreement at the end of that. So understand this may be a big nothing burger. I think there is a little bit more brewing here that meets the eye, and we'll get into some of that, but there's some significant issues that are happening right now with crypto. And I think the problem is that we have not been seeing the PR machines. Where are the PR machines? What we do know is that Trump and the White House is going to be meeting with a handful of crypto leaders. This is going to come in, looks like Coinbase, Ripple, Chainlink, Kalshi, and a handful of others, including Andreessen Horowitz. Here's my question, guys. Why are we not seeing Ripple and Coinbase out there pushing hard to at least position the industry? So where is the PR teams? Where are the people? You guys, of course, are welcome on the show because I'd love to find out where you guys think we're heading and what, in fact, do we need to prepare for as we start to move into this meeting with Trump and the White House. Let me go to a clip real quick because this will get into a little bit more detail on what Matt Hougan thinks is going to happen around winners and losers. Take a look.
When I look at who's attending, it's a lot from the crypto exchange side. It's a lot from the traditional exchange side, folks like the CME, ICE, the DTCC. I think topic number one is actually going to be tokenization. As you know, there's this huge change in how we trade everything. We're going from 9:30 to 4 to 24/7. We're going from calendar futures to perpetual futures. I think we're going to talk about this mega trend of tokenization. And the bigger winners from this, sort of the key winners, I think are actually the DeFi apps. Things like Uniswap, Aave, maybe Hyperliquid, even oracles like Chainlink. The reason for that is those apps are priced today like they're serving the crypto market, which is a $2 trillion market. This kind of meeting says those apps are actually going to serve the equity market. That's a $150 trillion market, or the bond market. That's a $200 trillion market.
So one thing that Matt is getting at here is how is this coming together? Notice the heads of the companies that are visiting there. You've got both crypto and you also have traditional finance. And I think that's the key right here is I think this is finally a point where the White House is going to position crypto to simply say it's time to bend the knee. TradFi is taking over. You've got the issue now around DeFi that is probably going to end up with mostly institutional capital flowing into DeFi. Question there will be, how does this play out? This is not going to end well, I do not think. All right, so where is Cynthia Lummis? That's my question. This is the person that has been behind the face of crypto for quite some time. Has she finally been in a position where she's simply saying, bow out gracefully, because at this point, it looks as though the banks are going to win. Let's take a look at this also, and that is the direction of the Treasury. You've got Bessent sitting here right now simply saying, hey, we're going to propose that these rules take effect. You've got a 60-day public comment period. Now, I think what's going to go on here is that the banks are going to use this 60 days to continually attack against banning stablecoin yields. And this, of course, is very, very bad for crypto because we don't have any voices out there pushing against this right now. It seems as though the industry has gone quiet, and this all points to a problem that could be brewing right now, and that is going to put up the gates around a lot of this infrastructure that is going to be dealing with essentially what the stablecoin and Genius Act have put in play. Now, the bankers still have some interesting things to say here, and how they approach it. Well, take a look at this clip and you'll see what I mean.
I was in a lot of the rooms where we were having these conversations, agreement in principle on how interest-like payments will be prohibited on payment stablecoins, but there will be an allowance for rewards to be made for, bona fide activities, certain transaction-based rewards. But where things stand now is kind of the same place they've stood since early May, since the markup. The actual legislative text that's intended to implement that principle doesn't quite do the job. And so, we've continued to advocate for a pretty narrow set of changes.
All right. I think, first of all, she needs to make up her mind, because we agreed in principle, but in reality, the way it's written, it's not really in principle what they want. The reality is they're going after stablecoins. They're going to make us jump through so many hoops. It's going to be useless to try to go out there and do anything on stablecoins with some of these yield opportunities that exist today, right now. So get ready, guys. I think it's going away. Here is Matt Hougan talking about whether or not clarity actually ever goes through. Take a look.
My expectation is that this thing will never die and maybe will never pass. It will just sort of live in this perpetual almost state. I do think the other part that I said, which also is coming true, is that crypto will move on without it. But the broad idea that we're moving assets on chain, I just think there's no way even the anti-crypto army will be able to peel that back.
This eventually will, having no regulatory framework is eventually going to hurt an industry the size of what crypto eventually will be. I do agree in one part, and that is that crypto is going to move along. The only problem is it may move along without the United States as being the linchpin of where the financial infrastructure is going to be built. Now, granted, yes, you're going to have a lot of infrastructure being built around tokenized assets. I get that. But this is a huge thwart to innovation if we don't see some sort of implementation for regulatory framework. So not a good look, I think, in general. And this only kind of confirms a little bit more of what I'm believing here. And that is what Saylor is doing. And that is fact that they're not buying Bitcoin. You've got essentially 8 consecutive weeks now, another pause on it. Company also sold 3.46 million shares of Master last week. So they raised another 333 million, all of that. And none of it went into Bitcoin. So that looks as though Saylor has finally yielded to what's happening here with the industry and maybe what's going on within the framework of regulation. And here's them just I feel like this is kind of just coping with the issue. And that is their statement here, strategy statement. And that is digital assets are assets. Index providers should measure markets, not decide which asset companies are allowed to own. That only tells me because you're not going to be in the group. So the MSCI's proposal puts it out of step with regulators, and Master doesn't necessarily need this. So I think this is a cope mechanism for what's actually going on right now with the crypto markets, and it is moving to TradFi. Unfortunately, the real question is what kind of implementation changes will be underway in the next few months. And it's very possible we could see some of this coming out of this meeting this week at the White House. Here's Matt Hougan again, because he talks about where the narratives are going to come from. Take a look.
I think some of the biggest catalysts are in places that crypto Twitter is not looking, right? If you talk about Morgan Stanley, Wells Fargo, UBS, and Merrill Lynch, the 4 sort of largest wealth management platforms, again, $20 trillion of assets there. If you're starting to get model allocations of 1 or 2%, that's a huge amount of inflows. So I think a lot of crypto thinks about the Fed, they think about the Clarity Act, they think about Reg Crypto. All of those are really important. But many of the biggest catalysts are actually internal to these wealth management platforms that are going to be the marginal buyer of the large cap assets, I think, over the next few years. And I would watch for those sort of small news stories that actually trigger tens of billions of dollars of flows on a persistent basis for years in the future.
Okay, so Matt is right. Crypto Twitter doesn't actually hit on that. We've touched on this multiple times, is that at some point there will be a landslide shift in how TradFi starts to deal with this. The one pushback that I have with what Matt's thesis is really how the narrative is going to be pushed out into the public. And what I mean by that is the ability to get true adoption scale. And because remember, again, it maybe the industry has been kind of on that, defensive, offensive play, and a lot of people have been a little unsure of investing. I think we're still kind of in that position. So it is going to be a matter of adoption curves and cycles. Now, if it takes a whiff and we start to see growth, yeah, I think that could be the case, and Matt might be right with that. But this is something we've been talking about for quite a while. The only problem is it had not been happening just yet. Could this be the signal where it is going to happen? We'll see. All right, one of the things that Matt's getting at is here's the example right here of UBS. This is they've more than quadrupled their BlackRock Bitcoin ETF position to nearly 90 million. Granted, guys, that's very small in general terms, but it does give you a signal that maybe there is more coming. I'll look for this as we start to see real numbers start to pile into crypto, maybe this fall. As we look at the market, maybe starting to correct a bit. You can, of course, always count on Tom Lee, and Tom Lee's BitMine continued to add more ETH last week, not like strategy. And he is, of course, bringing his total holdings to 5.8 million ETH. 5.8 million ETH tokens, guys, just so you understand. This is unreal. And they are nearing that 5% mark, which has really been the look of what they've been after. A third of all ETH is also staked. 34.4% right now of Ethereum's supply is now staked, which is a huge share of the supply, all locked up. And this is something we talked about ad nauseum, I feel like, and that is the opportunity for investors to finally figure out that Ethereum actually is one of the key assets to be able to invest in, especially in some of these areas like what BitMine is doing. So listen, this week is going to be huge. You've got these meetings that I think will give the narrative. Watch for a few things. First of all, watch for some gaslighting, because we're going to see it. Also watch for some very specific players. Some of those from SIFMA that will be playing into this, who are all looking at how the SEC and the CFTC are going to construct this rulemaking and what kind of message. Because remember, it's the White House that actually stopped the SEC from doing their release of how they were going to go forward. And I think this all gets into the negotiation around clarity. Now, does it mean it's going to happen? Who knows? We'll see. But there are a lot of players now at the table. So stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.